Hi friends, Simit here from informedtrades.com. Today is June 27th, 2014. In today's video, I want to do something a little different. I didn't really place any orders. I do have one position on that's short euro yen that's currently in the money, and we'll get to that chart in just a moment. But what I want to talk about today, and it actually relates to my short euro yen position, is something known as the volatility paradox. And this was something posted on zerohedge.com this morning. Let's take a look at that article, which we've shared also on informedtrades.com. The basic idea is that low market volatility breeds complacency and excessive risk-taking. So here, as you see, there's an interview here with Marcus Brunnermeyer. Does low volatility breed complacency and excessive risk-taking? Yes, I've coined this dynamic the volatility paradox. When measured market volatility is low, people feel empowered to take on more leverage and more liquidity mismatch, which leaves the whole system more prone to sharp movements. This dynamic occurred during the Great Moderation. During that period, fundamental and asset volatility was generally low, and market participants took on more leverage. So basically, what we're seeing here is the argument is that assets aren't moving, so traders feel comfortable taking on larger positions. The funny thing is that when that occurs, then assets do start moving, and so now we have the potential for sizable amounts of capital in the markets speculating on a move in the markets, and that can often contribute to a big move. Technical traders will know this as, or will often see this, especially candlestick traders, so I'm mainly speaking about candlestick trading here. Small candles precede big candles, and we see this development across time frames. That's the simple idea. You enter on the small candle, you make your money on the big candle. And if you look at what's happening in the yen, I think that's especially informative now. Let's take a look at the chart of the Japanese yen. Okay, so here is dollar yen. We see it's been in a pretty tight range. And this we've seen of all the yen pairs, and this is going back till at least January of this year. This has been going on. And there's been talk that the Bank of Japan is, considering following suit in the Fed and beginning to withdraw stimulus, and that this is sort of, we're on the edge of the cliff here. Now, which way are we going to break? Are we going up or down? That depends. This is a weekly chart that we're looking at of the yen. If we look at euro yen, and I currently have a short euro yen position. So here, from a weekly chart perspective, 50 is still above the 200. This looks like the trend is bullish. On a daily time frame, we see a little bit of a different story. And here we had 1, 2, 3, 4 straight days that are really tight. 4 straight candles that are really tight. Doji-like candles. And that's your cue. That's your sign that volatility is really low. And we have some other signs here. We have this resistance level established back here in February. 61.8, or excuse me, 50% Fibonacci retracement from this swing high to this swing low. So there are other signs for those who want to short, as I did here. And this position is currently working out for me well. But the big thing is we have a serious volatility contraction here. And what that portends, are we going to see a bigger move in the yen? There are a lot of people. We've talked about a lot on Informed Trades, a lot of other market people, John Malden, Kyle Bass. They've all talked about, the possibility from a fundamental perspective of the yen really, falling in value. So this is actually, if you look at the charts and from a technical perspective, I'm actually a little bullish on the yen short term, but I think long term I definitely see the idea that it's going to go down. The yen is going to devalue. They're in a debt situation that's like basically the worst in the world. I don't know how they're going to get out of this. But in terms of where we're at now, regardless of whether you think the yen is going to go up and down, we've seen that major contraction of volatility. So I think this is an interesting example of the volatility paradox. You can trade it technically, as I have, and I've been in a short euro yen position. That's working out well for me. From a fundamental perspective, there will be lots of people arguing that this is a sign that the yen is going to increase in value significantly to the upside. And of course, we haven't really discussed this much. But there are lots of ways of trading volatility itself. So you can put on structured trades where you don't necessarily need to speculate whether it's going to go in a specific direction. You can just speculate that volatility itself will increase. So I thought that was interesting. I think there's a lot of market lessons that we can learn from this and observe. And that's sort of the video for today. Have a great weekend. Best of luck in your trading, and we'll see you next week. Take care.